What's up, everybody? Welcome to the Fomo Factory. Today I would like to show you how Tradingview works. Why? Because if you are in crypto, you want to know when to buy, when to sell, what to expect a little bit, and you do not want to rely on people like me or other YouTubers or people on Twitter all day, every day. You want to read it yourself a little bit, of course. And therefore, I'm gonna just show you the basics on how Tradingview works, how to draw a simple trend line that can already help you a lot in your crypto journey. Believe me, since I know how to do this, I am doing much better in crypto, really much better, because you also don't buy or sell too soon or too late. So with that being said, welcome to the Fomo Factory. Subscribe to the channel, like the video if you like the video, and turn on the bell notification. And if you have an opinion about whatever, just leave a comment. Let's dive right into it. So Tradingview is a platform for the people that really don't know, where you can keep track of charts for crypto, but also stocks, and you can do so much. And I'm definitely not an expert, but I do know the basics and a little bit more than that. And I would like to show you that at least, because, you know, a good and clear and simple introduction to it and how it works, it's really not that easy to find. So what you do, first thing you need is go to tradingview.com. For the people that feel like, oh, but do I have to pay for it? No. You have paid versions, definitely, and I will explain the difference between paid and free in a little while. But I worked with the free version for a long time, and that worked perfectly. So you go to tradingview.com and you make sure that you make an account right there. You click get started and you can just make an account. It's free until you are ready. And that's exactly how I feel. It's free, worked fine. And when I felt like, okay, now I need to step my game up a little bit, you can pay for it. You can pay Pro plan, $14 a month, Pro Plus, $30. I think I have this one, but it's fine. You can also try that for 30 days for free. So that's pretty cool. Well, now that we are here, the main difference is that if you get a pro plan, you can use multiple indicators on your charts. You can have two different charts at the same time. It's ad-free, because in the free version you have some ads, but not that much that it's annoying. You can just do a little bit more, basically. And after a while, it is worth it. I would recommend you like getting the desktop version, so you can download the app of Tradingview, because it works a little bit better for me. So once you've signed up, you can go to the app and then you can get your charts right here. So what I would recommend you, I'm just being all over the place, but that's just what I'm seeing right now. You have this function right here to put it on lock or to not put it on lock. The most TA works best if you put it on lock, right? The chart, like the prices don't matter, but it's a little different on how the chart looks. And if I draw a line on this chart while it's on lock, well, I already have a chart right here, so I'll open a new one. And if I then put it off lock, then it looks a little different. So let me get a clean chart for you guys to show you from the beginning how it works. So you have your your lists right here. If you have the free version, you can get one list, and I think it's called watchlist or something like that. If you have the paid version, you can get multiple lists. So like I have a list with launchpad tokens, with low risk tokens, the main charts. Well, I have the most important ones, and I will show you exactly what I think the most important ones are as well. So for the people to start right here, this is what you get. If you have any questions, if I skip something, which I probably will, leave a comment. I'll make a version 2 for you. I will try to go over as much important stuff in as less time as possible. So you click the plus button, and here you can add charts to your watch list. Now, what charts do you want to see if you are in crypto? Well, of course you want to see the Bitcoin chart. Bitcoin, like I'm also monitoring altcoins, but Bitcoin is basically the chart that I look most at. So the ticker for Bitcoin, because you can press Bitcoin, of course, but you can also just press the ticker BTC, and you want to see the chart of BTC compared to the dollar, right? So then you press BTC and then you just fill in without a space USD. liquidity. Then you have all these different ones, and it's basically all the same chart, but it's on a different exchange, right? So it depends a little bit on what exchange you want to use, because some exchanges are older and they go further back, so you have more information. If you want to have the oldest Bitcoin chart, you can press in BLX, Brave New Liquidity Coin or whatever. So if you click the plus button right there, you have a chart. Well, this is not the right one. You have to go with the Brave New Coin Liquidity Index for Bitcoin. It's what it's called. So BLX, I already have it there. That's this one, BNC. That takes it most back to everything. But I already have it there, and I have my drawings right there. So let's start a fresh one right here. So let me do it on KuCoin. It doesn't really matter. If you click this, it automatically goes right there. So here you have your Bitcoin chart, right? Now, there are a couple of things you want to keep in consideration if you look at such a chart. The first thing is the time frame. If it's here, and it's very maybe I'm saying stuff that you feel like duh, but I rather say stuff that everybody understands than skip some stuff. Every candle right now, it's on a monthly. So every candle that you see right here is 1 month, right? If you put it on the weekly, then every candle that you see is a week. And let me remove all this stuff. So you probably see what I see. You don't see this as well. I'm going to show you how to pop that up and what it is in the first place. But now every candle is a week, right? So we are now here. So what does this mean? Well, for example, this candle, it's a green candle, right? We have the body, well, the top of the body. So in this week, it went all the way up here, 25.2. Right? But it's green, so this is where it closed, right? And therefore also this is where it opened. Now, this is in this week the lowest part where it was. So this was the range of the whole week. And this is where it opened, right? On a red week, where it starts at the upper side and closes to the downside. So it means that this was the complete candle. It was all the way ranging from 22.7 up till 25.3. But at the end of the day, it opened at 24.2 and it closed at 23.5. If you have your mouse on it, you can see right here exactly the levels, right? The O is open, the H is the high, the L is the low, and the C is the close, right? So that's kind of the basics of how you read these charts right here. Now, what I like to check, but it totally depends on how long you are in for it. I'm not much of a fan of looking at the hour chart, right? It says like this is really for day trading. You can look at the hour chart and you can see like, okay, this is every hour right here. If you are a day trader, then it's interesting. I basically never look at that chart, to be honest. I sometimes look at the 4-hour chart, which is interesting, the daily chart, and I look at the weekly chart most, and also the monthly chart, right? So I'm going to show you also how to draw some lines, simple trend lines, what charts are important to look at, and a couple of indicators that I use. I skip a lot probably. So therefore I ask you again, if you want me to explain anything, leave a comment, all right? Let's start with trend lines, all right? So if you sometimes, and this takes practice, because if you never do this, at least that's what I had in the beginning, if you never do this and you look at such a chart, you feel like, whoa, what the hell is going on, right? Here you have your toolboxes. I don't know if that's how it's called, by the way. And you have a lot of options right there. Because if you click on this arrow, you see a lot of different things, right? I can tell you, I don't know what everything is. But I don't need everything as well. There are a couple of things that are very important, right? So here you have your trend line. If you use this one, this diagonal, you can draw your trend line. You can click your mouse, then draw it over screen, and you can click to let it go. Right, and if you then go, well, you can delete it as well with your delete button or whatever. What I also use is the horizontal line. Because if you just use a horizontal line, it's pretty interesting, because then you can just click and the line is perfectly horizontal. In the beginning, I did not know that. Therefore, I'm saying that, because if I wanted to draw a horizontal line, I was like, is it perfect? It's bullshit. You don't need to do that. So it saves you a lot of time by already knowing that, right? But horizontals are what I use a lot. If we look at the daily chart right here, and let me put it on lock. If I look at the daily chart right here, you can move your cursor over it, right? And you see these lines, a horizontal line and a vertical line, so you can see already a little bit what the structure is. And if you move over it, what's important to look at is where most candles come together. Like if I put my mouse here, right, you can see we have resistance right here. Here is where a lot of candles got rejected, right? Here in this area as well. Here as well. Around this area as well, here as well, and here it is support. So this looks like an area which is kind of interesting. That's 21.5, give or take. So I take my horizontal line and I put it right here. Sorry, I had the wrong one. That was a horizontal ray. You have to have the horizontal line. So I put it around here, right? Now it's never perfect. At least not a lot. Sometimes you see these little fake outs, but it's around this area is a important area, right? So what you can already see is that if Bitcoin takes a hit, what you can think of is like, okay, we had a lot of resistance right here. We had a little support right here, resistance again. We had resistance again. We had resistance again. We had support right here. If Bitcoin comes down, it's pretty likely that we test that level as support, right? So if you see Bitcoin going down from this point, from $23,000, give or take, to, let's say, 22.1, where I have my mouse right now, or slightly lower maybe, does that look like a big support level for you? Not really. There is not a lot, so it's likely that it comes down a little more. So if you feel I want to buy, you can better wait a little bit and buy it right there. Right now, you can also use this at any point, right? So you can use it right here as well. Like this is the big range, basically, right? That's that 25.3 level. That's why everybody's talking about it, because you can see we had that resistance here, we had that resistance here, and we cannot break that. So that's an important level. Also, if you zoom out on the chart, you see that, let's say if we break that, is there a lot, you know, once we break that? Well, not really, right? We have this small area over here, but it's basically nothing. The big area where it then comes in, you maybe can see it already. Sometimes you want to move your mouse a little bit to find it out, right? But the big area where it all really comes in is around this area, 28.8, give or take, right? Lots of support, lots of support, lots of support, right? So if we do break this 25.3, it's very likely that we go to around that 29,000 level, right? If you're sometimes doubting, like, yeah, what's the exact level? Because, you know, this looks like a level already, but this also looks like a level. You can also go to this area right here, and you have your, well, this box right here, right? And then you can also draw this box right here. And you can say to yourself, like, okay, this is around the area, because it's never exactly the trend line where it will hold, where we always have fake outs, right? So you could say somewhere in this area is an area where I have to, you know, look out for, maybe take some profits, maybe put in a short, maybe not buy, you know, something to prepare yourself for when it comes down, because this is a likely area to get a rejection, right? So that's also what you can do. Now, there are also diagonal lines, which is very important. Let me put it on the weekly, right? And so, then because I use the weekly a lot, because I'm more in for the short or for the longer term. So what Bitcoin is going to do tomorrow is not going to concern me or hype me up about what it's going to do in 2025, for example. So when we look at the weekly, you know, couple of weeks, and we are already half a year later, for example, right? So that's how the chart moves then. Sometimes you really have to look at the chart to, you know, see what's going on. And sometimes you just have to mess around a little bit. And what's kind of a rule for this, the more touches it has, the more accurate it is, basically. So if you want to draw a horizontal to see like, okay, we are, for example, now in a downtrend. Did we break that downtrend, right? You can use that. So let's say this is where the bear market started. And you can move that horizontal and you can move it right over this one as well, these two, right? So far accurate, all right, cool. If we draw it even further, do we see something more accurate? Well, in this case, yes, because what do you see? We got a first rejection right here. We got a double rejection right here. But it makes a lot of sense that we firstly got a fake out right at this point. You can see it right here, but the full body close was right under that trend line. Then the next week, we got above it, did a perfect retest, and then we really went above it. And then twice in a row, we had another retest kind of perfectly on that trend line. So that says that that trend line is pretty damn accurate if you draw it like that, right? So that's how you draw it. And sometimes you just have to adjust. Sometimes it could be that you draw it right here and then you want to move it up to make this making more sense. But then you figure out that this doesn't make sense anymore. So it's a lot of messing around, seeing what makes sense eventually, right? But if you draw it like this, makes a lot of sense for me. This is the trend line that I am looking at, and what I just draw, by the way, this white line right here, I've drawn it on the daily. Sometimes you want to switch it over to another time frame, for example, the weekly. Like, does it still make sense, right? This upper trend line does. This one, does it still make sense? Well, we have, you know, resistance here, but yeah, resistance here. You know, but you can mess around with it a little bit to see like where is it all coming together most, right? And it's around this area right here. I can also easily draw it here, right? Then you see the full body closes. Do you have to take the fake out or the full body close? I like to use the fake outs as well because that's exactly the point where such a chart gets support or a rejection, right? So that's often pretty important. Now, sometimes some things come together. In this case, let's say we were here and you already drawn these trend lines, right? So you had this trend line and you had this trend line. You could have expected that if the crypto market were coming down, these two trend lines come together right here. So we have two different types of support at one point. That's stronger support, of course. So it's more likely that if we come down, that we find support there. So if you already knew that, then you could have said like, okay, once Bitcoin reaches that level of around 21.6K or something like that, I'm gonna buy some more or I will open a long. Now, in hindsight, of course, that's very easy and it would have worked out, right? You would have made your gains right here. But you can use that in the future as well, of course. So these are the trend lines that are most basic, but I think that especially this diagonal is sometimes all you need. Sometimes you don't have to. You see these guys on Twitter or on YouTube popping up their chart like, what the fuck did you do? You see lines and things and stuff everywhere, right? But sometimes less is more. And one simple trend line is just enough. For this one goes very simple. We were in a downtrend. The trend is your friend, right? Until the end of the trend. The end of the trend is right here. Doesn't mean we go full moon again, but it says that, you know, the downtrend is at least over. Now, sometimes you want to be a little careful with that and you do not want to rush, because in this case right here, it could have gone the other way. You could have said like, okay, the trend is over, but it could have been a fake out and we were under it. So the more closures above such a trend line, the more confirmation it basically is that the trend has changed, right? And you can also get a black swan. That's always the case. And then it all goes down. Yeah, if you want to consider that kind of stuff, you shouldn't be charting anyway, I think. So that's the basics of drawing trend lines. You can click that trend line and you can give them different colors and you can give them different types of thickness and all that to make it easier for yourself and all that, by the way, as well. So in this case, that's Bitcoin. You can mess around with it a little bit. You can just move your mouse and feel like, hey, here is where a lot of stuff is coming together, basically, right? And if you really want to, you know, take the big picture, you can also say, okay, I'm gonna remove this. I'm gonna remove this trend line from here. And in the very longer longer term, bigger picture, this is the range for Bitcoin, right? We are basically between 25.3 and 18.5. And you can include this area as well, but this is where a lot more support was be found, also resistance. So I consider this a long-lasting fake out, basically. I don't think that, you know, I think this is more likely the range right now. So that's that. A couple of tools you have a text box. You can type something if you want. It's really not that important. It's maybe interesting for making notes for yourself. What's quite interesting is the measurement, right? So you could say to yourself like, okay, I've drawn this line right here, right? So let's say we break this whole area where we are right now, and we go to around that $29,000, right? That's your expectation. How much percent gain is that? You have your measurement tool right here. You can click it. You can see it's 25% up or down or whatever. So you can do a little risk management. You have a Fibonacci tool, which is slightly more complicated, but basically your Fibonacci tool, it's a very mathematic tool. In this case, you can take it from the downside of a range to the upside of a range, and you see some levels that are pretty important. So the 618, the 0.5, the 1.618. So if you take this tool, you can see like, okay, we went up like this. What are some important levels to look out for? Well, the 0.618 comes in at 19.2. It also comes in with this area right here, by the way. So you can say like, okay, if we really go down, then this is where we will probably find some support, right? This is for the downside, because I took it from the downside to the upside, and that basically says, okay, compared to this run that we had, if we see a retracement, where could it go, right? And the 0.5 is right here. Makes sense. We bounced off of it right here. We found a lot of resistance right here as well. That's around the 20.3 level, but I think that's for another video. These are the most important tools you can use. I think the trend lines are most important. I don't want to make it too long, but there's a lot to go over with. So please, again, leave a comment if you want to see some stuff, because I'll probably forget a lot. Now, before I'm going to show you what charts are really interesting to take a look at when you look at crypto, because you can follow the Bitcoin chart, but there are some charts that are really you should know about to know what's going on in crypto. Before I'm gonna dive into that, what are some indicators that you should use? What I use, so if you go to the upper side right here, you have indicators. And here you can fill in any indicator you want, right? So what I think is pretty important is a moving average. And in this case, the 50 moving average. So if you go to indicators, you fill in MA. Here you have moving average exponential. That's a really important one. So click that and you'll see this blue line right here, right? If you open this, you can see the indicators that you have, right? So here you have your indicator, MA 50. Do I have the right one? Let me check if that, sorry, I clicked the wrong one. Forget what I said. I'm not going to do that over. Indicators, you fill in MA. And here you fill in moving average. You click on just moving average. That's it. So let me remove the other one for you. So that's your moving average. What I like is put it on 50. Right. So now we have that on 50. You can see right here that the 50 daily moving average, it's just a very important level to look out for. So if you look at that, you see that we are still holding that as support. As long as we hold this one as support, we are doing great. So that's an important one. So that's the first one. Another one that is really important in my opinion is the bull market support band. If you click that, you do not have to adjust anything, right? If you look at the bigger picture of this, you can see the bull market support band. What is it? This is a combination of the 50 and the 200 weekly or daily, I have it, whatever, moving average. And you can basically see that in a bear market, we are always under these moving averages, and we get rejected from these levels a lot. See that? We approach them and we get rejected and we go down. And basically, when we really break that level and we are in a bull market, it shows that it holds it as support. It's driving the price up, right? It's climbing exactly on that level and it's finding support right there. Now, in the last bear market, we got below it. We tried to break it, got rejected, went down a lot under it. A couple of months later, we tried again, got rejected again. But now we broke it again, right? And now you want to see that we hold it as support on our way up. You can make a lot out of it, right? You can really look for yourself like, okay, how is this bull bear market looking compared to this one? How did the bull market support band react right there? What's the comparison? What's the same right now as back then? What's the difference? So you can come to maybe a good conclusion for yourself. The chart doesn't give you the answers. The chart does give you the tools for you to come up with your own answers. So that's a really important tool to use. Another one that I find really interesting is, well, you can check out the volume. So you can just type in volume and then you have the volume right here. So you can see, for example, in September, we got a lot of volume on KuCoin, right? You can better use the BLX index so you can actually see the total volume right there. But it's an interesting tool to check out so you know what's going on. But another one that I think is really important. So let me get rid of the volume to not make it a mess right here. Another one that's really important is a stochastic RSI. Stochastic RSI is basically a momentum indicator, but it's a really interesting momentum indicator. So you fill in STOHCH and you have the stochastic RSI right there. If you click that, you can see here the stochastic RSI, and it depends on your time frame as well, right? So if you put it on the daily, for example, what's really interesting about this indicator is basically every time it's oversold, you can say to yourself like, okay, now it's maybe not such a good time to buy. And if it's overbought, and if it's oversold, you could say to yourself like, okay, now it's a better time to buy. If you just purely trade off of the stochastic RSI, you won't nail the exact bottom and the exact top, of course, right? Because here, for example, it was well, it's not a good example, it didn't last very long. Here you could say, okay, it's oversold. So you would have bought right here, right? And here, you could also say it's oversold. So you bought right here. On the chart, it's still, you know, a big difference, right? But you will get your trades right 9 times out of the 10. I like to use this on the weekly though, because on the weekly, it really says, sorry for the lag, I had to pause my stream for a while. But on the weekly, you can see that it's now quite overbought, right? We came from the oversold territory where we were at 15K, right? And now we are pretty much oversold right here, or overbought. We were oversold and we are now overbought while we are sitting right here. So is this the best time to buy when you look at the weekly? No, it's not. On the other hand, it doesn't have to necessarily mean anything, because here we were also overbought, and here we were sitting at, you know, 46K, but here we were still overbought, and in the meantime the price went to 68K. So in hindsight, it was a good idea buying right here. But overall, if you buy at a higher stochastic RSI, it's usually not good. You can always better buy right here. As you can see, you buy right here, sell right here, so you sell it right here. So you bought it around 34, you sold it around 47, and then you wait, you buy again when it's here, and then you have to nail the top and the bottom, of course, but it gives you a good indication. So these are a couple indicators that I use most. Very quickly, the video already takes quite long, sorry for that, but if you do like the content, then please like the video, it would help me a lot. And sorry for not being all, you know, enthusiastic and stuff like I usually am, but I'm still pretty sick. A couple of chart that I feel like this is what you want to be watching when you look at crypto is, well, of course, Bitcoin, Tether. I think the DXY is really important as well. So this is the dollar currency index. This shows the strength of the dollar compared to a basket of assets like stocks and crypto, right? So the stronger the dollar is, the more money people have in dollars instead of risk assets. So you want to eventually see this thing go down if you are a bull. Right, so this is one you want to look at as well. So you look at this by clicking the plus button and fill in DXY, and you will see the DXY pop up right here. Another one I think is pretty important is, of course, Ethereum. It's the second leading crypto asset, and also often people say that if Bitcoin does something, altcoins follow. It's usually, more the case with Ethereum, in my opinion. So if you want to see altcoins go up, it's good if you see Ethereum go up as well. And by looking at this chart, I can already say, like, okay, Ethereum is sitting at some strong resistance at this area, and the support might come in right here, right? So we have resistance, we have a lot of support, we have resistance. So the area for Ethereum right now is between 1740 and 1270, right? We're now sitting at 1640. So is it good to buy right now? Well, we are at the upper side of the area, so usually that's where you sell. That's how you have to take a look at it. You can also look at it like this, by the way. It really depends. This also makes some sense, right? So find a way for yourself to figure that out, right? Because also this makes sense. It depends on your time frame as well. But whatever. Ethereum, very important. I think the Ethereum Bitcoin pair is also quite important. So this is how much Ethereum is worth against Bitcoin, which is basically going sideways since May 2021. So while every altcoin is basically in a bear market and goes down against Bitcoin, Ethereum does not do that, right? So Ethereum is super strong. By the way, if you want to manage your altcoins, so let's say you are into Cardano, right? Ticker is Cardano or is ADA, so you fill in ADA and you want to see how that's doing compared to USDT. So you click on the chart, let's say on KuCoin right here, there you have your ADA USDT chart, right? But you also want to know how it's doing compared to Bitcoin. Because if you are in Bitcoin and you want to later buy back altcoins with your Bitcoin, you want to know how they behave. So you can also fill in ADA BTC in this case. And there you have the ADA Bitcoin chart, right? So sorry for the bulls. But that's also a way to look at it. And another chart, which is pretty important, is the S&P. The S&P, is one of the leading stocks, and crypto usually follows the S&P. Now, if you want to look for the S&P, the ticker is SPX. And you have the S&P 500. One thing that I noticed on this chart, by the way, but it probably is different by the time you watch this video. I'm shooting this a little on forehand. But it was in this downtrend, rejection, 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 broke out, retest. Again, now retesting. I think that the S&P will bounce in this area. Right, could go a little lower, could have that fake out, but I don't think it will close below 3,900. I could be wrong, but there are multiple support levels right here. If you look at, let me check, is this correctly? There are multiple support levels right here, right? We have this diagonal that goes back for a long time. We have this horizontal right here. It looks like shit, but it's also because the S&P doesn't trade on weekends, and therefore you'll see all these gaps. So it looks a little messy, but we actually have a lot of support on this horizontal. We have the bull market support band. It's now below it. So that's not really that relevant, but I think that if you put it on the weekly, yeah, there it is. And we have the 50 moving average, which is also in that area. So there's a lot of stuff going on here for the S&P. On the daily, it is oversold. So usually that's going to reset. So I think the S&P will bounce. That's how you kind of can take a look at it. Another chart to wrap it up real quick. Total crypto market cap. So you just fill in total. You have the total crypto market cap. So that's everything crypto related. Also stables though. So that's how much money is actually in total sitting in crypto. Here you can see that the total crypto market cap was going down and is now, you know, still in its range basically. Total 2, if you fill that in, you have everything except Bitcoin. And the total 3, you have everything except Bitcoin and Ethereum. So these are very, and this, keep in mind, you might think like, oh, this is the altcoin market. Yes, but including stable coins, right? So if this goes down 10%, yeah, altcoins, you, if everything is good, don't go down 10%. So if this goes down 10%, stables don't. So actually altcoins have to compensate for that. Give that another 0.5 extra drop. So if you see a 10% move down here, it's usually 15 on altcoins. And a chart that I think is really important is the USDT dominance. So you fill in USDT.D. Here you have the USDT dominance. So you can see how much money is actually sitting in USDT, which is pretty important in my opinion, because you see that a lot of people, what you make out of this is that since this chart shows 2018, last 5 years, people are getting money into dollars, but it's USDT. It's not on their bank account. So they don't plan on buying stuff with it. They plan on deploying, right? So it's high right now, but it is kind of bullish because eventually it will go down, right? So we want to see this thing go down if you want to see crypto go up. I want to leave it here. I have a really sore throat. I hope it was helpful. Again, 4th time, but if you have any questions, drop them in the comments below. Subscribe to the channel if you haven't. Smash the bell notification and the like button, and I'll see you guys very soon. Take care.